Well, hello, this is Hall Martin with Investor Connect. Today we're here with Tahira Dosani of Accion Venture Lab. Tahira, thank you for joining us.
Happy to be here. Thank you, Hall.
Great. Can you tell us more about your background and then the mission of Accion Venture Lab?
Absolutely. So I'm one of the managing directors of Accion Venture Lab, which is a impact investing initiative within Accion. And Accion is a nonprofit that's based here in the US and has been operating for over 50 years, working in the space of financial inclusion. Financial inclusion is really about ensuring that everyone has access to the right financial tools, products, and services that they need to control and improve their lives effectively. And Accion's role within financial inclusion really started in the microfinance space, where Accion led the commercialization of microfinance and was an early investor in commercial microfinance entities, really helping to grow the sector. And just over 5 years ago, Accion created the Venture Lab, which I now co-run. And the Venture Lab was really created to leverage and support startup-led innovation in the financial services space. You know, as you think about financial services and about the reality that we have 3 billion people in the world today that are underserved by financial services, the fact of the matter is that, you know, we now, with the advent of new technology, new innovation, we have the ability to reach and profitably serve many of those underserved customers. However, banks and traditional financial institutions aren't necessarily best placed to leverage that technology or to experiment with it to try and reach the underserved. And we've really seen fintech startups taking a leading role in leveraging technology, in going after niche and underserved populations, because they see those underserved populations not as unprofitable market segments, but rather as a tremendous market opportunity. They see those customers as a segment that if they are able to tap into effectively and really be a first mover provider for, they can generate significant profits and returns from these segments while serving them with relevant, affordable products that are really going to help these consumers. Accion created Venture Lab to invest in these startups. The Venture Lab is a seed stage venture capital impact investing initiative within Accion that's really focused on identifying, investing in, and supporting seed stage companies in the fintech for inclusion space. And my background and the way I got into Venture Lab is I actually started my career in management consulting. I was with Bain & Company, but really interested during my time in Bain by, you know, how you take that strategic toolkit and apply it beyond just the Fortune 500 world in, you know, more developed markets. How that strategic and analytic toolkit that's so common in the private sector can really be applied to drive development, and how the private sector could play a role in development.
So you have a seed fund. Can you tell us a little bit more about what the seed fund is looking for in startup technologies or companies? I guess you're looking for both technologies as well as startups itself, but what is your criteria for that fund?
Sure. So we, as a seed stage investor, we're typically the first institutional capital into the companies that we invest in. So we're coming in pretty early and we're investing roughly $500,000 when we do invest. And we're at that stage, we're looking for companies that are operational, that are active in market, that have a minimum viable product or pilot launched in the market, and have some early traction. We don't expect significant revenue at that stage, but we do expect them to have a full-time team and a product in market so that we can get an initial sense of what they're doing. We're also really looking to support innovation that startups are using to drive financial inclusion and to really revolutionize fintech. And so that can be a technology innovation. It can also be a process or a business model innovation. But we're really looking for that innovation. And then finally, we want to make sure that the business is targeting a low-income or underserved customer with a product that's addressing a key barrier to financial inclusion today. So, you know, the kinds of things that we've invested in are things that across the financial services landscape. So we're looking at credit, we're looking at savings, we're looking at payments, we're looking at insurance. But within those, so take credit, for example, the fact of the matter is that a lot of low-income customers don't have credit scores or are credit damaged. And how can we leverage technology to help create a score that measures more than just their past history, but measures behavioral or psychometric elements to help create a score that more accurately represents their creditworthiness today?
And so, what's an example of a successful company you funded? What were they doing and how did it work?
Absolutely. I'll give you a couple of examples. One company that I'll mention that we've actually since exited from, but was a really great investment success for us, was a company called Clip in Mexico. And Clip was a mobile point of sale payment solution, much like Square in the US. And the idea was that it would enable small businesses and merchants, micro entrepreneurs to accept card payments, which really would build the card payment ecosystem in Mexico, would enable smaller businesses to partake in the economy that was generated by people leveraging credit cards, and would create more financial stability for those businesses, because by processing card transactions, they were able to build a better financial history that they could then leverage in other ways. And so we invested in Clip a few years ago and exited last year as part of a secondary offering to another venture capital firm. But something like that, which is really driving payment access. I'll give you another example on the credit side, which is a company in East Africa called Apollo. And Apollo Agriculture lends to smallholder farmers in East Africa. And smallholder farmers are farmers, individual farmers, or families who own a relatively small plot of land and are largely credit invisible or removed from the formal financial system. They would never be able to get a loan from a bank. However, they definitely need capital up front to buy seeds, to buy fertilizer, to do their planting. A lot of smallholder farmers are actually in a capital crunch when it comes to their planting season. And Apollo provides input financing for these farmers, really enabling them to get the right quality seed and fertilizer that they need to be able to plant and ensure a successful harvest. And Apollo does that by leveraging a number of sources of alternative data from these farmers, including remote sensing data such as satellite data, where they can leverage satellite imagery to not only get information about the farmers and farmland, but also leverage that imagery to provide agronomic advice to the farmers, ensuring better outputs and yields for those farmlands. We're talking about a segment of the population that's incredibly underserved, application of cutting-edge technology, leveraging satellite imagery to lend to and support these farmers, and doing so in a way that's profitable and scalable and serving a massive market with tremendous opportunity.
One of the areas of technology coming up in this space is blockchain. And what impact do you think that's going to have on this space?
We're really excited by the potential of blockchain technology. There's a number of elements of blockchain that are particularly relevant when we're talking about financial inclusion. The first is really supporting digital identities and know your customer requirements, or KYC. So if there are ways to promote digital identity over the blockchain, that really enables people who don't have a formal ID to get verified much quicker and much more easily to enable them to partake in the formal financial systems. There's also elements that blockchain applications around smart contracts that can be used for claims management and insurance, for example. It can be used for things like land titling to enable a better registry than what exists today in many countries that can then be the foundation of things like mortgage lending. Obviously, in the payment space, there's a number of blockchain applications, and we're also really excited by the potential for credit and underwriting. So while Bitcoin may be going through a lot of volatility and seeing, hype and cyclical interest, we really see applications of blockchain technology that could be incredibly relevant for financial inclusion.
Well, there's technology and there's also regulatory. And one of the challenges in the fintech space is the amount of regulatory that comes with the territory of handling money, doing payments, and so forth. How do you see that progressing here with the micro payment tools you have coming up?
That's a great question. It's the regulatory side is definitely one of the challenges of financial services. And not only are companies working in tough markets around the world, they are also doing so in an environment that is heavily regulated. But because they're often driving innovation, there's also regulatory uncertainty around a number of the things that they're doing. One of the things that we try and do as an investor, beyond just supporting our companies, is really trying to help build an ecosystem around fintech innovation for inclusion. And that involves talking to regulators and highlighting the innovations and insights that we're seeing in our portfolio to support the type of work that they're doing. And we're seeing regulators that really are embracing the opportunity of technology for inclusion. For example, one of our companies that's operating in the UAE, working heavily with migrant workers there to enable them to get access to accounts and better remittance payments, is working with the government there and the fintech sandbox there on some pilots around digital KYC. And so we are really seeing thoughtful regulators and central banks in a number of markets that really are putting effort in to support innovation that drives inclusion.
Well, it seems like a lot of these fintech tools have to do with digital identity management. You are who you say you are in the system and so forth. What portion of fintech tools, go after that area, and how well is that progressing?
That's progressing well. I mean, I think there's still a lot of space to go there, but we're seeing a number of, if you take India, for example, Aadhaar, which is their biometric identification system, is something that the government has implemented over the last many years and really forms the basis for a whole host of other products and services. So it's such a critical layer, and it really then ends up being the core of provision of a number of other services, because you can only provide digital payments and digital credit if you actually can first digitally identify an individual. And so it really is core to what we're doing. We're seeing fintech companies that are working exclusively on that ID piece. We're also seeing a lot more infrastructure being built by governments, by regulators that are driving that so that fintech can be layered on top of that.
Well, we talked a moment ago about blockchain, but what about cryptocurrencies themselves being an element to facilitate the fintech startup? Where do you see that playing in, having a digital currency that's already native to the web?
We're seeing some companies starting to leverage cryptocurrencies, particularly in the payment space. And especially for back-end payment processing, we are starting to see a little bit of traction there. We haven't invested directly heavily in that space, in part because, the volatility of cryptocurrency has made that difficult, and in part because it is tough and challenging for lower income customers to get comfortable with cryptocurrency. Trust is so critical when it comes to financial services. And so ensuring that customers have a product and service that they can understand and trust properly is really critical. And so I think it will take some time and it will take some stability in the crypto markets before we really see widespread adoption of crypto driving inclusion products.
But theoretically, do you think tokens would have an advantage in this space as opposed to currency itself? Or do you think there is an opportunity for tokens to be a part of this process of providing better tools for the underbanked?
I think there definitely is an opportunity for tokens. And we are also seeing a number of startups that are in that space actually use ICOs as a means to try and raise money, generate tokens to support their testing, innovation, and build out of the product. So I think that's another area where you're seeing the venture space really evolve with the development of crypto platforms.
What are the areas you see really progressing on a technological front that goes into this direction, aside from identity management, blockchain, cryptocurrencies? What are the other elements that are driving forward that you see are going to be a big player?
Now, there's a number of areas that we're particularly excited about. I mentioned alternative credit scoring earlier, and that's an area that we've done a lot in over the last many years, and really thinking about how we now take the lessons from that and apply them beyond just credit underwriting, but also for things like insurance and insurtech. There's, I think, huge opportunity to support both customer acquisition, underwriting, and claims management in the insurtech space. And that's a sector we're really excited about. The other areas that I think we're really excited about into the future are neobanks and challenger banks, and really looking at the set of new financial services players that are coming up that are disaggregating a number of the functions that the banks used to play and reaggregating them or rebundling them in various ways. So I think that's definitely a space to watch. We also continue to be interested in agriculture and other types of asset finance around the world. It's an area that's incredibly underserved to date, and we see a ton of opportunity there. And I think all of this requires finding the right balance between tech and human touch, especially for the customer segments that we're talking about.
What exactly is a neobank, and what's an example of what they're doing that's different from a standard bank?
Sure. So one example is Simple in the US, right? So all digital bank really targeted towards millennials that really said, we don't need the brick and mortar bank infrastructure that is traditionally associated with banks. And we can absolutely do without that. And we can provide a relevant set of services to consumers directly. And we can partner with one or more banks on the back end to do that. And so I think we are starting to see more companies like that emerge around the world.
Do you think that's a key element of moving it forward, is moving away from the physical bank to moving into a neobank or a mobile-based bank where you can do everything through a mobile device, given you just can't put a physical bank everywhere in the world, but you can give everybody a mobile device? Do you think that's the future of banking?
I think that's a future of banking. As I mentioned earlier, this balance between tech and touch is really important. Mobile phone penetration, smartphone penetration in particular, is still not where it would need to be to move entirely away from a brick and mortar model. Now, it doesn't need to be brick and mortar banks, but it might need to be an agent network that leverages a retail presence of an FMCG retailer, for example. And so I think, you have to find the right points of touch and connection to get a customer who isn't digitally savvy, who's low income, who may not have a smartphone, who may not be literate or financially literate, to really get them into the system. But I do think we are moving towards a lighter model in terms of physical infrastructure for sure.
Well, to go back to the seed fund, you guys offer many services and supports. Is there an incubator, accelerator type program in there, or is it purely a seed fund with the support that comes with an investment?
It's the latter. It really is. It is a fund, and we make investments. We are approaching this from the perspective of we want to deploy capital into promising companies. But given the challenges and risks of early stage investing, and given our position as having deep sector expertise in understanding fintech for inclusion, we have an investment model that is very hands-on, that is very high-touch post-investment. So it's not an incubator accelerator program, but I would say it is a very high-touch investment model that we work with.
Well, if somebody wanted to be a part of that, where should they go and what should they do to learn more or apply?
So I would say the impact investing space is one where, there is a lot of interest. And I would say that, if it's a space that someone's interested in coming into, really recognizing that the hard skills around investing and portfolio management are really critical. Beyond that, we're looking for people who have lived and worked in emerging markets and are really operators, know what it takes to build a business and to do so in a context that's often very different from doing it in Silicon Valley, for example. That on-the-ground emerging markets experience coupled with the hard skills of investing and portfolio management, as well as some operating experience, are all things that we look for when we hire. But you can definitely read more about what we do on our website at accion.org/venturelab.
Okay, great. And if somebody wanted to get in touch with you, what's the best way should they do that? Through LinkedIn or through the website?
Either of those is fine.
Okay, great. Well, is there anything we didn't cover that we should in our final minute here on this podcast?
I actually, just coming back to one of the questions that you mentioned earlier was around my background, how I got into the space. And I mentioned I started my career in consulting, but then actually moved into operations in emerging markets. And I was working with an emerging market telecom operator. And through that, actually got to launch a mobile payments product. And really through that, got interested in this link between technology and financial services, and then moved into the investing space. But that link between technology and financial services is one I really want to emphasize, because we often take it for granted here in the US that those things are mutually reinforcing. And thinking about extrapolating that to an emerging market context, and really looking at the opportunity to extend financial services and financial inclusion in a way that is really would not have been possible 10 or 15 years ago because of technology, and what that means for the life of someone who can't access credit, who can't access a savings account, who can't access insurance as a safety net for them or their families, who can't make a payment easily, have to stand in line for hours to do so. And so we can really leverage technology to make financial services more accessible, thereby promoting inclusion and helping the roughly 40% of the world's population that is underserved to actually participate in the formal economy.
Well, certainly the world of technology has moved forward very quickly. Even in the last 5 years, has made giant leaps and bounds forward, and the new opportunities, people that are in the underbanked space, and Accion Venture Labs looks like you're leading the way there with your seed fund and the work that you've been doing with supporting the underbanked. So we appreciate your taking time to talk today and hope to have you back again in the future.
Thank you so much, Hall. It was a pleasure to speak with you.